All right. Morning, guys. How's everyone doing? Morning. Big day. D-Day. Yeah, it's D-Day. Today, FOMC should be interesting. Should be definitely market moving, most likely. Obviously, depending what we see, depending what we hear from Jerome Powell and the bunch. So, yeah, we got to prepare ourselves a little bit, right? We got to get an idea of what to expect, but we can't predict today, right? That's the biggest thing. You cannot predict today. Trying to predict what happens today is most likely going to cause you to lose money. So there's no predictions going on here today. There is getting a general idea of what we see, of what we could see, and sort of basing our decisions around that. So today we're going to talk a little bit about, what the market's pricing in, what we can expect, maybe some levels to watch. But of course, I'm going to give you guys a lot of caution of trading this event. I personally do not trade during FOMC. I don't even try to look at it. I don't even try to trade it. As you guys know, I trade a system. I trade on break and retests, 9 EMA rejections, or holds. I trade around technicals. Now, if a macroeconomic event like the FOMC makes technicals invalidated, why am I trading during that period? Am I going to trust a 9 EMA hold during the FOMC? No. Am I going to trust a retest during the FOMC? No. So why am I trading? That's how I think about it. I'm not going to change my strategy because of big moves in the market. I want to catch this. I want to hit a home run off FOMC. I want to be right. I want to buy calls because Jerome Powell said this. That's not trading, guys. That is you coming into the market with a gambler's mentality and trying to make money, trying to become rich. Not going to happen. So there's your fair warning for today. I'm probably not going to trade much because it's not according to my system. And I've had very good success this month and in the past this year sticking to one system. And I can't stress it enough. So that's a fair warning for today. Technicals are not going to be as... I'm not going to trust technicals as much as I would on a normal day. So that's that. So let's go ahead and continue. Let's get started. Let's look at the economic calendar. Let's get an idea of what we can expect, what the market's pricing in. Look at some charts and just try to prepare ourselves the best we can. But just remember, guys, it's going to be a volatility-filled day. So be careful. All right. So today, futures. As always, economic earnings calendar, triple rate hike. We'll talk here about what I expect, what we could see. I talked about it in my video yesterday if you want to go ahead and watch that. So keep an eye on that, triple rate hike. We'll talk a little bit about it. Google gap fill, right? We'll talk about I'm keeping an eye on this potential gap fill on Google if the market sees upside. Nvidia sitting at a major demand. Still riding a Costco put. I still like it under this resistance. Straddle seems to work. Yeah, straddle could work if you keep it small. I know people that play straddles during this period. It's possible. The thing I don't like about straddles is you could lose on both sides, and that's just not fun. Costco, Apple really holding on to this demand zone, 132.50. Gonna look at Tesla for you guys. Energy continues to slip, and then Shopify is officially trading at the big C lows. You guys know what I mean by the big C. I can't say it. Shopify is trading at the lows of the big C. So interesting. This is making me want to buy more shares, to be honest. I think Shopify is worth more than it was at the peak of the panic during the big C. I could be wrong. That's my personal investing decision. I think Shopify is worth more than what it was worth at the peak panic of the big C. So we'll see what happens there, but I'm still a share buyer of Shopify. All right, and then we'll go over your tickers. Yeah, market participation is the third, correct. All right, let's get started. So, first things first, guys, let's go to the economic calendar. Just because we also have retail sales this morning. Let's not forget about that. So, we also have retail sales this morning, which we need to be aware of. So, here's the economic calendar. This morning, we have retail sales at 8:30. So, we'll be on the stream for that. Let's keep an eye on 8:30 for the retail sales. And then I like Big C better than Rona. The Big C. And then 2 o'clock, guys, is when the party gets started, right? 2 o'clock, FOMC statement, FOMC projections, and then Fed Chair Jerome Powell news conference. So, if you are here right now, I can guarantee you that there will be a move at 2 o'clock, and there will be another move at 2:30. There is always two different moves here. It's either a move and continuation of that move, or it's a move and then a reversal of that move. Almost always do you see two separate moves here. So please do not chase the first move. That would be my opinion. If you're going to trade today, I would wait to see what the continuation is after Jerome Powell starts to speak, because there is almost always a two-legged move here. So just make sure you understand that. So that's that. Retail sales 8:30, FOMC 2 o'clock, 2:30. Okay. Let's go over. There's not. Oh, I think. What is tomorrow? Oracle, something small. No, Adobe. We got Adobe earnings tomorrow. I'm not interested. So yeah, that's that. Adobe earnings tomorrow if you're interested. All right, let's go futures. So, good morning to Shumbi. Here we go, guys. Here's one thing I want to say, right? I sort of put this in the Discord chat this morning. Here's what I said in the Discord chat. I said, I'm going to provide some levels I am watching today in individual stocks. However, please remember that these levels are only valid pre-FOMC, right? A lot of the technicals that we're going to talk about in today's live stream is going to be mostly pre-FOMC. Technicals will likely be invalidated on any volatility post-FOMC, right? I said this is why I don't typically trade during FOMC, because I don't like throwing shit at the wall and hoping it sticks. You know my strategy is heavily based on technicals, and when the market is moving irregardless of technicals, then I'm not trading, I'm gambling. So to me, today is dangerous, because if we start moving irregardless of technical levels that we talk about today, then I'm not going to be involved in it. So just understand that when we look at the futures today, there's going to be volatility swings, which could sort of make these moves sort of invalidated. So here we go. I'm watching about a 3% range today. That's about the range that I'm watching for if we get the largest reaction to the upside or downside, I'm giving myself a bottom and upper limit here on the market. So I'm thinking about 3% in either direction. 3% would bring you to 11.7. Irregardless is not a word. Okay, Pete, thanks. 11.7 to the upside, and then 11,000 to the downside. Those are the upper and lower bands that I'm watching today. 11.7 here to the upside, which is these previous lows right here. You can see right here, support into resistance. So I would be looking for that 11.7 level if we do get upside. And then if we get downside, I'm watching this 11,000 level. Those are the two levels that I'm watching today. It's about 3% in either direction. 3% in either direction. That's what I'm keeping an eye out for. So keeping an eye on these upper and lower bands on the market. I think that's about the same area that about the right area that I'd be looking for. Previous lows, potentially where we start to slow down if we get an upside move. And then 11,000 is that major level on the NASDAQ on the daily chart. So watching those, I will give you a little bit of insight into what I've seen over the last few days. Because, you can clearly see here that the sell-off is slowing down, right? There's no doubt about that. It was a very quick sell-off, and we're starting to go sideways, right? So, I can't say that this isn't a decent consolidation period, that you could see something that pushes higher. I'm not going to say for sure, but we have to understand, at least look at this market and say, okay, this intense selling has slowed. Over the last 2 days, we've started to consolidate. So this looks like a pretty decent area to watch out for. This is around 11.3. 11.3 is what we've been sort of holding on to here. You can see right here, 11.3 is sort of what I'm watching. That seems to be the level that the market really wants to hold. If we go to the 1 minute chart yesterday, guys, you can see that we broke under that 11.3 right here, and we quickly got bought up. I mean, just really quickly. So this 11.3 seems to be an area that the market is trying its best to hold on for. So I would at least have that 11.3 on your chart. I think losing that could sort of give you that insight into, okay, maybe we're going to start to slip here. So we've tried to hold on to 11.3 2 days in a row. You can see that bottom that's starting to try to form, obviously a temporary bottom. I'm not sure if it's a legitimate bottom, but 11.3 right there, 11,000 and 11.7. Those are sort of this is sort of the range that I'm watching out for. I can't give you, too much more detail than this because FOMC is going to cause volatility, and really tomorrow is the day that we can get a little bit more technical on the future side of things. But today I would be watching this week's lows, which is 11.3. I would be watching 11,000, and I'd be watching the previous support into resistance at 11.7. So that's the NASDAQ. Here's the ES. Here's a few things that I'd be looking for on the ES. Similar 3% range on the ES. And then the lows here are around 37. Tough to say. It's a little bit more of a range, but it's right around this 3740, 3700. If I go to the 1 minute chart, we can see that we are basically, it's right in this general area, right? 3730, 3740, right in this general area is where I think you're trying to hold on. So I would watch the lows of this week. That's the first level. Lows of this week, which is right around this 3740, 3730, right? I would watch that level. To the downside, I'm watching the 3650. And then to the upside, 3860, 3870. So that's my 3% range on the ES. And the same thing goes, guys, right? It's too difficult to know what's going to happen, post FOMC. Really, all I'm doing is I'm giving myself some outer bands to watch for. So you have a previous support here, which obviously got a little invalidated back here, but it's pretty much this level right here, right? It's right around this 3870, 3860. And you can see that I think that would be your upside potential right up into the previous support. And then your downside potential is about 3% towards that 3650 level. That's what I'm looking at. And then, of course, this week's lows. So keeping an eye on those levels, guys. Today, again, very difficult to base your decisions off technicals post as the FOMC starts to come out. Okay, so I want to talk about, just to go over it again in case some of you guys missed it, I want to go over why the market fell recently and why the market, and how you know that the market is pricing in a 0.75 rate hike, a triple rate hike. You can look at the /ZQ. All right, so look up in the top left of your screen. You can see my ticker, /ZQ N22. This is the /ZQ for July. And if you guys are not familiar, what you do here is you take 100 and you subtract this price, which is 98.35, just about. This comes out to 1.65. This comes out to 1.65. Now, the current federal funds rate is 0.83. So to get to 1.65 from a 0.83, we need to increase 0.82 by next month to hit what the market is pricing in. That would require at least a triple rate hike today. This is why I believe a triple rate hike is priced in, and why I think you will get a triple rate hike today. The Federal Reserve doesn't have to give what the market is priced in, right? It doesn't have to do, the Federal Reserve doesn't have to decide to give what the market is pricing in. But if the market is pricing in, I'm going to assume that It probably knows a little bit more than I do, and I'm going to go with what the market is pricing in. I'm going to anticipate what the market is pricing in, and as of right now, it's 0.75, at least a triple rate hike, to get to the federal funds futures rate, which is about 1.65 in July, when we're sitting at a 0.83. So if we get 0.75, I don't think you're going to see as much of a reaction as you may expect, because the market has fallen this week because of it, right? You see where this slash ZQ dropped? This slash ZQ started to drop after CPI data was released, right? Friday, we had CPI. It was hotter than expected. The slash ZQ started to fall. Why is the slash ZQ falling? It's falling because it's pricing in a higher than anticipated federal funds rate. It's because the inflation's still high. If inflation's still high, then the market needs to price in the potential for a higher federal funds rate. So you see that we moved lower, and then on Monday, when we had that huge downside day, look at the slash ZQ. Now, I am in belief that the NASDAQ fell on Monday because we were pricing in the 0.75. I believe this move from Friday to Monday is us pricing in the 0.75. So I'm not, remember guys, I'm just basing this off data that I see in front of the charts. I don't believe you will see that large of a move if you get what the market has priced in over the last 3 days. That's my belief right now. Big downside move, I believe, comes if you get outside of the 0.75. Either you get a 0.5 or a 1%. I think either of those are negative. I think 0.5 is negative because it's not going to do enough, at least in the market's opinion. And I think 1% is going to cause a very aggressive sell-off because it's just an aggressive strategy, right? So I think if you want to see the market come to some type of slow, if you want to see the market maybe consolidate, maybe hold up a little bit, I think you want to see 0.75 today. That's what the market is pricing in, and I think that's what you're going to get. So hopefully that makes sense to you. I think it makes a lot of sense when I talk about it. It's based off it's based off data that the market is providing us. So I'm going to go with what the data, I'm a data-driven person. I've worked in the corporate life where everything I did was data-driven, very analytical. So I'm going to go with what the market is telling me. I'm going to go with what the Fed funds rate or the federal funds futures is telling me. I'm not going to try to become the genie in a bottle that guesses what happens. So if the market's pricing in 0.75, I think we're going to get 0.75. The data is nowhere. I just showed you the data. This is the data right here. Slash CQ N22. This is the federal funds futures for next month. This is data. This is not fake. All right, this is legitimate. Okay. Triple rate hike. That's my explanation. Take it for what you think, but I think that's about accurate. All right, let's continue. Google. I'm a data dog. I'm a data dog. Let's continue. Google. So, remember, guys, as I go through these technicals today, everything is on the table, right? Because of 2 o'clock today. Everything's on the table. Everything's on the table. I can't really give you the crystal ball today, right? Because we don't know what's going to happen at 2 o'clock, 2:30. So here we go. You guys can see right here, Google has a bottom hit that it started to form around 21.30, right? 21.30 starting to hold. What you guys can see here is that we have a little bit of a gap, right? We have a gap here on Google, right between this 21.80 to 22.20, 22.30. So we have a gap on the 4-hour chart, right? So if we get upside today, right? If we get upside today, I would look for Google to fill that gap. If we get some actual nice upside, if today's a good day, then I would say look for that move through into that gap, right? So I would watch this gap today, guys. If we get above, the high here is 2184.37. 2184.37 is the high of that wick candle. So I believe if you start to get over that 2184 area, you're going to get into that gap fill, and you might start to see some upside on Google. So that is definitely something I'm watching. 21, why did I delete that? There we go. To the downside, if today's weak, then you have a very nice level here to play Google under. You can see that it's tried to hold it for a significant amount of time. Look at the last 2 days, really, just sort of holding this level. And if you drop this, you guys know what's going to happen, right? If you drop this, you know what's going to happen. So just giving you guys some levels here today. You have a gap fill right here above 2184.37. You're sort of in the, right? Google's sort of trading on the island. It's an island trade right now. This is just sitting between two bodies of gaps, two bodies of water. So you have a gap here. You have no price action here, right? So if you drop here, I'm thinking you're moving lower. If you break the gap, maybe you move up towards the gap fill. So those are the levels I'm watching today on Google, 2184 and 2130. So keep an eye on that today, guys, for Google. Nvidia, very nice demand hold, I will say, right? This is definitely the play I'd like to take if I see, right? If we see upside on this market, I'm going to instantly look at Island Boys. I'm going to instantly remember to look at Nvidia because I like this 4-hour demand that's holding. So if the market has upside today, if we get any type of upside off FOMC, Nvidia will probably be the one that I'm going to be looking for because I do like this 155 demand that is starting to hold. You can see triple bottom here, bottom, starting to find something off that bottom. Obviously, I need to wait for a continuation move. I need to wait for FOMC to see if it's legitimate. But I also see that gap fill above, right? So you have this gap right here by 165 to 170, right? So 165 to 170, you have your gap on the 4-hour. If you can hold this low at 155, then I would be interested to see if there's upside here. So that is going to be totally dependent on what happens at 2:30. I may even just wait for the next day. If it's, let's say today we close very strong off of FOMC. Market likes what we heard. Market moves higher. Why not just wait for tomorrow, right? Tomorrow could be a very nice day of continuation, or it's going to show you the real move. So would I take Nvidia post 2:30 trying to chase the continuation? Maybe something small if it looks really good, but I think I'd be more aggressive the following day, seeing if there's that next day continuation, the real move continuation. So Nvidia 155, nice level, looking for that upside. 165 gap fill towards 170, keeping an eye on that to the upside. And then, of course, guys, on the flip side, you know what's going to happen. You drop this level, you retest it, you know we're moving down, right? Very obvious. All right, that's Nvidia. Costco. So I'm in a little Costco swing trade. It's like worth, I don't even know what it's worth. It's like $100, I think. Just doing it, just doing it because I like the setup and not really stressing it because I don't even know how much I have in it. I have $100 in it. So yeah, it is what it is. But I like it because of this, right? I like this previous support into resistance. So I'm just going to continue to update you guys here. I really don't, I'm not really looking at it on a daily basis. I'm sort of just watching for it to make sure it stays below, 460. 460 is going to be my stop on this little swing trade. I'm looking to see if Costco can turn previous triple bottom support into resistance. I see a little bit of a bear flag potentially forming here. So if we get negative on the FOMC, I could see the bear flag break. All right, I definitely could see that. Nice support into resistance. I think this is going to be a difficult level to Costco to break through. If I go to the short-term time frames, you can clearly see the last few days' reaction at this level. Look at Costco every time it hits this green zone, right? You can see Costco hit it, rejected, went through it yesterday, rejected, went through it end of day, rejected pretty aggressively. This morning, it's starting to sort of push through that zone right now. But hey, I like the setup, so I'm in it. It's pretty small. I'm not getting aggressive on swing trades these days. Just way too much risk. But I like this little previous support into resistance. I'd at least keep an eye on this, guys. This looks like a decent setup if we start to lose steam here on Costco, of course. So just watching that. Apple. Yeah, Apple's holding on for dear life here, guys. This is crazy. I mean, look at the last 2 days on Apple. Look at this level. Look at the consolidation. Crazy. Just really, just you can just see how clear that this market is trying to hold on to this level. 132.50, just barcoding right there at that level. So this is, as I said every stream so far this week, this is very important. This is really, this will give you some insight as to where I think the market moves next. If you get something below this 132.50, it is not going to be good for the market. If you're able to hold this and push higher, then you'll probably get some sympathy, right? So either way, this is a really big level in my opinion here, guys. It's really not much of a, if I go back, it's really not much of a level that I would have, like, I don't see this level in past price action. You guys can see here, it's pretty much a chop fest between the August 2020 and August 2021. Pretty much a chop fest here, right? The only place that I see this level becoming valid is like in the past few days or past month, which is right here. You guys see this previous low right here? So I am sort of surprised to see Apple respecting this level so heavily, because it really was just a swing low or a pivot low from this May low back in May 20th. So interesting to see. I would have not expected this level to hold. I don't see it anywhere besides this little wick low. So that is interesting, at least on Apple. But 132.50, that's your level on Apple, guys. You give this up, you should know what to do. Look for the retest. Look for the continuation. If you hold it, I would look for maybe that gap fill into that 138, those previous lows here, right? So that's that. That's Apple. 138 upside resistance, 132 downside support. You have this little range here. Keep an eye on which way it moves in that range. Okay, let's go Tesla. So Tesla, I am watching a range as well here. I'll go ahead and zoom in. Get this cleaned up for you guys. So right here, guys, this is sort of the upper and lower bands that I'm watching on Tesla today. The lower band or the upper band is right around this 685, 690. You can see that it's been tested multiple times. You have a test here. You have a test here. You have a test right here. And then you have another test right here. Ultimately, you gave it up and you are now trading below that level. So if we move back into it, right, I'm going to be looking for that to turn into resistance. So right in this 685, 690 area is where I'll be watching for Tesla to potentially lose steam if we get upside. If we break through that level, then you probably can see some continuation. So make sure to watch that 685, 670. To the downside, I'm watching the May lows, right? I've told you guys that maybe Tesla could move down to the May lows. That's your next level in sight. The May lows of 618 right here. So you have about, let's see, what is this percentage? This is just about a 10% range. So 5% in either direction, right? About a 10% range between 685 and 620. About a 65 or a 60 point range. So we'll see what happens. But this is really what I'm watching, right? Either this, right? There's four scenarios, right? This or this. These are the four trades that I'd be willing to take. Break and retest to the upside, rejection off the level, hold of the level, or break and retest to the downside, right? There's four scenarios here. You either break through it, you retest it, and you go long. You either play puts at the rejection, you play calls at the bottom side support, or you play puts at the rejection of the support, turning it into resistance. That's the four trades. I would never just buy calls right here or puts right here. I got to wait till I see it test these levels. So that's how I trade. So I get a little bit more confirmation on what could happen at these levels. So I would watch these levels to make decisions today, guys. 685, 620. Okay. Energy. Spider monkey indicator. Yeah, I'm just drawing lines so you guys can sort of visualize what I'm looking at there. But yeah, I know that's not very pretty. Daily chart. Energy continues to be weak, right? So I am definitely focused on this, and I'll continue to show you guys in the live stream. We'll continue to update here on the energy pullback because this is definitely, I think, going to be an opportunity. Maybe we need to wait for it to come back towards that 50, maybe towards this $80 level, this uptrend. That could be where we have to wait for. Maybe towards this 50 SMA. If we go to XOM, I'm starting to like this retest hold here at the 20 SMA. This is starting to get interesting, right? You guys can see right here, we have the 20 SMA and we have a hold of this previous 95 resistance. This level, if I zoom out, this level dates back all the way to 2016. Right here, guys. You see this little pivot high? Also, again, right here. Right there. So this 95 level, if I zoom in, what am I starting to see here? I'm starting to see XOM hold this level potentially. Hold it, and also right near that 20 SMA. So is this where you try to get that? Is this where you try to get that entry on XOM back to the upside? Definitely something I'm watching. I'd probably wait for some green candles to form here, maybe some higher highs and higher lows, and then maybe I would go for it. But that is something that I'm watching there. XOM on that retest. All right, let's go to retail sales. Let's pull that up. Get Walter going for us here. All right, retail sales. Down 0.3 and the consensus, oh boy. Okay. The retail sales negative 0.3, consensus was positive 0.1. Interesting. US May retail sales ex autos 0.5. So it looks like autos were a big reason for the downside. Yeah. Ex autos ex gas 0.1. So if this retail sales number includes autos and gas, right? Then that looks like it's your main driver of the retail sales being negative, right? If you exclude autos, you're at plus 0.5. Interesting. I'd have to see a little bit more of a breakdown. Just from looking at this is that's my first understanding of it. But retail sales negative versus a consensus of being positive. Not the best thing that you'd probably want to see here, guys. Probably why the market is starting to get a little weak off that. So yeah, retail sales down versus the consensus of being positive. Negative 0.3 versus a positive 0.1. X autos was pretty positive. X autos X gas was 0.1. I wonder if you're seeing a slowdown in auto buying. I mean, I would assume so. Interest rates are rising. So that's interesting. All right, let's continue. So we got energy. Let's take a quick look at CVX. I want to see what that thing's been up to. Yeah, CVX broke down as well. Probably looking at this 155 level again. Either way, guys, I would keep an eye on energy moving forward. We all know this is the strongest sector in the market. So we all know that on any pullbacks, we should be interested in buying it, right? If you're in a very strong bullish market on energy, pullbacks will likely be bought up. So just sort of throwing that out for you guys. You're getting a pullback on this energy move. If you liked energy before this pullback, you probably should like it more, right now. So just keep that in mind. All right, last thing I got for you here is Shopify. And, this is just this is a personal opinion, guys. I know, some of you may not agree with me here because obviously it's hard to agree that this is a good buying opportunity when Shopify is literally straight down. I mean, I don't blame you for disagreeing with me here. Down 85% from the highs. I can't not take some risk here on a stock like Shopify, which I know can be pretty aggressive to the upside when it's trading at the virus levels. I mean, this is March 2020 right here, guys, and we are trading at those levels. So, I'm not going to put a significant amount of my net worth into this, but am I going to put a few $1,000s into some shares for the long term? Yeah, right. I think I have about $2,000 in long-term shares in Shopify. So I have roughly about maybe 7 or 8 shares right now of Shop at an average cost of around $330, I believe. So, hey, if I can get a few $1,000s of Shop at $330, I think I'm going to be okay. This seems like an opportunity to me, guys. I really don't think Shopify is that bad of a company. I think they actually are positioned quite well for the future with e-commerce. It's not like it's a dying brand or dying company. I think it was just very overvalued, right? This is obviously overvalued, right? Shopify went up 420% in a year, 2 years. That's crazy. So was it ever worth $1,700 a share? Probably not. Absolutely not, actually. Is it worth more than it was in 2020 at the virus panic lows? I would think so. So, hey, I'm just here BSing with you right now. I think this is an opportunity. You guys take it for what it is, not financial advice, but I am a share buyer here. Shop at C lows. Interesting. Very, very interesting. We'll see what happens. In 10 years, if you guys are still watching the channel, we'll see if I was right or wrong. Because that's really the time horizon. It's not over the next year or two. It's, further out. So we'll see. That's interesting, though. All right. Let's go over the tickers that you guys want to look at today. Let's go over some more stocks here. Let's pull it up. What do we got today? All right. First one we got here is GLD. So, GLD, gold, how's it doing recently? Yeah, not really as you would think. Maybe today it's up a little bit. Let's go to the weekly chart. I remember we were talking about this gold wedge breakout. I know someone caught this. They were talking about it on the stream for a pretty extended amount of time. I did break out. It just didn't really continue, right? Look at that rejection at those highs. Here's what I'd say, guys. GLD, if you want to put some of this in your long-term portfolio, sure, be my guest. If you want to be, if you just want to invest in the long term with gold, then that's what you do. You don't really trade this, in my opinion, unless I wouldn't trade this, unless maybe you trade it on Forex market. I know a lot of people do that, but yeah, this is a long-term investment. If you want to have gold in your portfolio, that's really all I could say about that. Goldman Sachs. Yeah, banks have been getting hit, guys. Banks have been getting hit. Today should be interesting for banks. We should maybe see something on banks today after FOMC. You guys can see Goldman Sachs, everything. XLF moving lower pretty aggressively. Citibank, Bank of America, Morgan Stanley. What else? Wells Fargo, right? All moving down pretty damn aggressively. So right now, financials are not ideal. Financials are not being very liked at this moment. What would I do? I would just wait to see if there's any reaction off today's meeting. See what the reaction looks like today. But would I be looking for upside here? No. You ticked upside on Goldman Sachs. I probably wouldn't be looking for upside until I see what the reaction is on the XLF. You got to see the XLF wake up here before you can go long on GS. You got to understand that the financial sector is just not in a good place right now. Yeah, they're up a little bit, but, they're up a little bit. But what's the overall trend here? I mean, maybe, just maybe, you start to see XLF give you a little sympathy bounce off this retest right here, right? So maybe around this 31 level, you could maybe see something start to hold. So yeah, I mean, it just understand that the XLF is under some pressure. I would need to see some more positivity here before going long on a bank. I can't just buy. I can't get myself to buy calls when I see an XLF that looks like this. I need to see at least some higher lows start to build here, and then maybe I take it for a continuation move. But right now, I'd say stay away from upside on banks. It does not look very good until something changes. Walmart. Yeah, you're sitting at this level on Walmart. What did you say? Monthly chart trend break? Monthly chart trend break. Let me see. Can I even get the monthly here? Yeah. Monthly chart trend break. Yeah. Yeah, it's there. I see what you're looking at. Monthly chart. There's your trend break. I mean, if you're looking at the monthly chart, then you got to be looking at, at a long-term play, right? I wouldn't be looking at monthly chart and trying to trade it short term. So I don't know what your exact plan on Walmart is there, but here's what I'll tell you for the short term. If I go to the daily chart, why is this not giving me more time? Sorry guys, 1 second. There we go. All right. If you go to the daily chart, here's the thing I'll show you. Right here, 120. You can see there's a lot of consolidation in this area, a lot of price action, and you're sitting at it again. So if you break the 120 and you hold below it, then yeah, you might be able to move lower, but there is definitely some area of support at this 120. That's what I'd watch for. Watch for that 120 to hold up. Definitely a pretty important area here at the 120s. So keep an eye on that. Datadog. I mean, we look at it every day, guys. It's the same thing. I think you're probably going to come down towards that 82. This was a great trade to the downside. I think you probably look for this 82 to hold right in this area. You're sort of in it right now. So I would look for that 82 to hold right here on Datadog. Obviously, you need a market reaction to the upside for this to move higher. Apple we looked at. Tesla we looked at. Ovintiv. Aventiv. What the hell is this? So, daily chart. Is this energy? I mean, I would assume it's energy because of the way it's going up. You can almost tell that this is energy just by the stock, the chart. Yeah, it looks like it's energy. Yeah, I mean, same thing with any energy stock right now, guys. You're getting a pullback, but I think this is an opportunity, in my opinion. So you're getting pullbacks on XLE, right? XOM, all your big energy stocks. /CL. What's /CL doing lately? A little bit of a pullback, nothing major. But I think if you're looking at energy stocks, I think you gotta look for the pullback opportunity. That's my opinion. How would I base off, when this starts to bounce? Keep an eye on the XLE. When the XLE starts to move higher, when the XLE starts to hold and maybe starts to have a couple green days, then you can probably look for that upside. So yeah, keep an eye on the XLE. Next one we have here is Target. Are we in that gap fill? I think we are. Where's the gap fill start? The gap fill starts... It really starts like... What's the low of this candle? 146.50. 146.50. And then what's the low of this candle? 143.38. So if we drag this over, right, we have this zone of gap here, this gap fill zone. If we drag this over, I'll look at FedEx in a second. Looks like you guys are talking about it. You can see that we're starting to trade in this gap. So where do I think Target can go? I'd probably say you could probably see the bottom side of that gap, which is 138.50. That's the bottom of that gap right there on Target, 138.50. That's probably where I'd see it. Let's see if it can hold up. But you're in the gap fill right now. So watch out for that. Target maybe down to 138.50. What's going on with FedEx? Well, I know FedEx yesterday had the... Oh, nothing today. Yeah, it was yesterday. Okay, I thought something happened today. Yeah, yesterday they increased their quarterly dividend. That's why it went up. FedEx increased their quarterly dividend yesterday on FedEx. Maybe look for the continuation today. I'll just warn you that chart does not look very good. Like for it to just sort of rip. It's got a lot of resistance above. Okay, what's next? Amazon. Amazon sitting at that 2018, 2019, 2020 high, guys. That's same level it's been sitting at, right? You guys can see right here, this 101, 102. See how it's just sort of triple bottoming here? Where does this level come into play? It comes into play for about 2 years, 3 years of time. Right here. Rejection, rejection, rejection. We're sitting right at that level. So what does that mean to you? That means that this level has to hold. This 101, 100 area has to hold. If this doesn't hold, you're moving significantly to the downside. But, keep an eye on this. This is a very big demand zone on Amazon. MicroStrategy, this just trades with Bitcoin. So whatever you think Bitcoin does, you follow it with this. I don't know Bitcoin. I don't trade these stocks. I'm not the right person to ask about MicroStrategy. I can't tell you if Bitcoin's gonna bounce or not. I don't know. This just correlates with Bitcoin, guys. So trade it as if you are trading Bitcoin. But I do not trade those. So this isn't MicroStrategy. I'm looking at Microsoft. Sorry guys. Here's MicroStrategy. So MicroStrategy, Bitcoin. So you got a low here of around 134. It looks like it's up towards that 153 right now. What's the low of this candle? 176. I'd look for a 176 as resistance. But again, guys, right? It's Bitcoin. It's not something that I'm very, very versed in, so probably not the best person to ask. BABA. Yeah, BABA's just sort of sitting in a range now. I mean, you got to get back above 111, guys. That's really it. You got to see BABA back above 111. That's what I'd look for. If you want to go long on BABA, see if it can get back above 111. That's the biggest level there on BABA right here. Support. You tried to get through it, sort of failed it, and then really dropped. So I would say you need to see BABA over 111 if you want to go long. If you want to go short BABA, I would look for the rejection off 111. Right? I think 111 is the level to see, level to watch. NEO. You had a nice day on NEO yesterday, but just looking at this chart, you got the 100 SMA there on the daily chart. You can see it rejected there previously around 20. You have a ton of levels up here. So if you zoom out on this chart, yesterday was a nice day, but when you zoom out, it just sort of gets lost in the sauce. You're going to have big days on NEO, right? NEO's a small cap, so there's going to be big days. Like here's another big day, right? This was a 16% green day followed by downside. So you're going to get big spikes on these small caps. I don't know if you just trust. Well, look at this move, right? Here's a 20% move on NEO followed by just downside. So you have these big green candles sort of baked in here every once in a while. You get that big green day that probably suckers in a lot of people, and then it just sort of fails after, right? So in my opinion, yesterday was a nice day, but I'd be watching out for the 20 SMA and maybe that $20 even mark on NEO. Roku. Yeah, Roku's just crap, man. Great rejection off that 100 level that we talked about a few weeks ago. Now it's just sort of chilling here at this 75. You guys can see right here. You can see that we're just holding support, and Roku's sort of just holding there again, right? So I would just watch out for Roku to sort of hold this 75 level. If it starts to lose it, then you probably get aggressive. All right, last but not least, Domino's Pizza. Hey, it's done pretty well lately, actually, Domino's over the last, this is weekly chart, so this is 1, 2, 3, 4, 5, 6 weeks of green in a row for Domino's Pizza. Can't hate on that. Right? So, nice little move on DPZ. It looks to be holding this low. This will be a safety name. On Monday, guys, believe it or not, the only two stocks that were green on my watch list were Domino's and McDonald's. Domino's and McDonald's were the only two green stocks on my watch list when the market was down 5% on Monday. So, I mean, it could be a nice little buying opportunity for the long term here. You might be getting a nice little deal on a safety name that probably is pretty resilient within any type of recession. Or it's not a bad name to play safety in, right? Here's your chart through all the turbulations and everything that's happened. Here's 20. I mean, that's a big gap down in '07. I don't know what was going on in Domino's in '07, so can't really speak to what was happening back in '07. But I mean, you're not trading DPZ, guys. Why do you not trade DPZ? Because of this. This is your price action you deal with. So this is DPZ price action. It's very choppy. It's very illiquid. There's no volume. So this is a long-term investment or nothing. It's not a trading stock. Maybe it's a long-term swing if you want. All right. That's all I got. Hope you guys have a great day. Yeah, you got NASDAQ starting to push a little bit here for sure. I see that. Little NASDAQ push. Let's see what levels we should watch here before we go. What's the Tuesday high here? 11,530. 560. Yeah, I would watch this whole range up here. Sort of 530 to 560. Looks to be a little difficult right here. And then you got your 600. So watch these tops right here. Rejections, rejection, maybe another rejection here. So watch 530 to 560 and then 11.7. That's your upside. All right, guys, have a great day. Please don't try to guess what happens today. Just trade the continuation. No matter if it goes up, if it goes down, we are traders. We can take advantage of either direction. So that's the luxury that you have as a trader. You can take the direction that it's showing. Why give away your luxury of not having to choose a direction? Why put yourself at a disadvantage of trying to guess what happens? Why give yourself only a 50% chance? Increase your odds. Play the momentum. Play the continuation. Play the direction that's showing. Don't guess. Have a great day. Thank you guys for being here. Press that like button if you could, guys. See if we get the 500 likes. That's always the goal. Hope you guys can help me hit that. Subscribe to the channel if you're new. Trying to get to 50,000 subs. That would be awesome. And that means we're halfway to the plaque, which I can put in the background over there. That'd be cool. All right, guys. Thank you so much. Have a great day, and I will see you tomorrow. Peace out.